You can't miss out on this. As real estate goes through a seismic shift compared to a few decades ago, we're also seeing a clash between the old and new business advice around the industry. This incredible conversation between two real estate moguls, Robert Kiyosaki and Grant Cardone, very nearly got heated when Grant insisted how new entrants into the real estate business are better off joining with large institutional investors than starting small themselves. I want to show you what Robert Kiyosaki's response as well as Grant Cardone's own history in real estate reveals as the real disconnect between their investment philosophies. Keep in mind, this is not financial advice, but subscribe to the channel for more discussions like this, and let's dive into it.
It's like you guys could call me and say, hey, I want to put $1 million in your deal, or we just opened this up $1,000. And we're literally changing the way people can invest in multifamily. Because Kim, I agree with you that to think that somebody's going to go raise $2 or $3 or $4 million on their first deal, probably not real, and they probably shouldn't do it.
So let me say this much: is the easy part is raising the money. The hard part is managing the property. And I think that's what people forget, because when Kim and I first started out, the managing a property is the biggest business of all. But it also, if you're just a mom and pop, you can only manage so many properties. So what is the secret to going from a small investor to managing, let's say, 150 units at a time?
Yeah, well, I would say, first of all, just skip the small stuff and go buy big deals. Even if you have to collaborate with somebody else to do the big deals always work better than little deals. Multifamily, as you guys know, it's all about math. It's multifamily. It's not one unit or two units.
But you make a good point, Grant, because if you're going to start, so I started with a little 2-bedroom, 1-bath house because that's how I learned. But if you're going to start with a big deal, then I would say you want to definitely have an experienced, knowledgeable partner in that. You're not going to get the deal. In this market, you're not going to get the deal if you don't have the experience. Yeah, exactly.
So like even in the 26 unit and 30 unit and 80 unit deals, you're going to pay a premium so heavy today to get that deal. This is so competitive now. There's so much money chasing this yield.
No, that's Grant, hang on one second. I'm being very clear with people. I don't recommend that at all. Uh-huh. If you cannot manage a property, you don't know the legals, the ins and outs, because you have a contract with your renter, and if you don't perform on your contract, and also the renter tears your property up. So to say you can just go and buy a 150 unit apartment house, you can do that, but there's not many people who can.
I think I know where that frustration in Robert's voice is coming from. It's not just the fact that what Grant Cardone said there sounds like a half-baked personal advert on his show, but also that the advice he's giving out misses out one massively important factor in the equation, and that is risk versus return. The bigger you splurge on a large property, the greater risk you're taking on an investor. And to say that simply pooling your money with an institutional investor like Cardone Capital means new investors are skipping over all the lessons along the way and having large investment firms become a crutch in their own investment journey. And there's two things wrong with that. For one, Grant Cardone himself started small in the real estate business with a shabby single-family unit in Texas that he bought for $78,000 back in 1990. Was it the greatest financial move ever? Well, the truth is it didn't have to be, because the upside was proportionate to the downside. It wasn't going to make him rich, but as a new investor, it didn't saddle him with a lot of risk either, since it was just one single-family unit. Secondly, while he calls on new entrants into real estate to go with an institutional investor because it's less risky, he fails to mention that the upside is also drastically reduced. Cardone Capital, much like other institutional investors, charges a share of that profits called the management promote. According to the firm's own website, that number stands at 20%, which an investor would have to pay from the profits to Cardone Capital. The more you scale that, the more money you'd pay.
The raising of the money is the easy part, especially today. It's managing the property and making it turn a profit for the long term, and also protecting the asset with the legal contracts is where people fall down.
Yeah, and look, when everything's good, but you hits, you're going to find out if you're a manager or not.
Exactly.
Well, we don't manage properties.
Yeah, I don't either. Like, I don't manage my properties, but somebody's got to manage the manager.
And that's what I'm saying is in my opinion, it's easy to raise money today.
Yeah.
So to say to somebody to buy, a 400 unit apartment house and just manage it, I think they're going to, be the skip of the Titanic. But to me, is the management of the property and making it turn a profit is the hard part today. The raising the money is easy. There's a lot of financing for it. People are going to throw their money at you.
Yeah. I don't know how, I don't know that I'd say it's easy. We've raised $700 million. You still got to manage people, phone calls, it's not, I mean, when you say it's easy, it's not easy. Like we do it with no ads, Robert. No, I haven't spent any. I think I spent 50 grand in ads for 700 million. No brokers, no middlemen. I still got to get a message out, right? So the hard part of real estate today for me is getting the deal.
Again, there's not enough value in the listener for that, apart from sounding like a hasty advert for Cardone Capital. But to give him the benefit of the doubt for a moment, Grant has previously written about how drastically the real estate market has shifted in the last few decades. If you believe him, Grant Cardone says that the American dream of homeownership is gone forever, and he foresees more and more people moving into small apartments over the next 20 years that cost less than $1,300 a month in rent. He calls it his strike zone, and that's where much of Cardone Capital's real estate portfolio focuses. But to say to the average investor right now there's no place at all to start small like he did, perhaps came across as disingenuous to Robert Kiyosaki, given that ownership of institutional investment firms inevitably stand to gain from that advice, and that's what seemed to have pushed Robert over the edge, finally making the frustration clear and outright calling on Grant to be, quote, respectful to his audience instead of what came across as a pitch for his firm on another platform.
Yeah, Grant, hang on. Not too many people are going to do what you do. Our audience wants to know how to get started right now.
Okay.
So please be respectful to our audience, okay? Any comments, or Kim?
Well, I was actually, my question to Grant was, how did you get started? Because you started with nothing as we did. How did you get started? How did you get into the whole real estate game?
Yeah, I got started with one unit. Like the same way, like, and I'm not being disrespectful to anybody. I'm telling your audience they're better off partnering with somebody on a big deal than going one unit by yourself. Because the problem with one unit is when they move out, as you know, you're 100% vacant. And all of a sudden real estate starts to hit some new reality.
So you would start with 500 units at a shot first deal?
I started with one unit.
No, but are you recommending they partner with somebody on a 500 unit deal?
I would at 1,000%.
Wow.
So
I wouldn't do that.
Yeah, that's a different strategy because we want
to get
the knowledge and the experience and the education that goes with the hands-on management. That's our philosophy.
Yeah,
I would tell people the best thing for them. I don't think you have to go 500 units the first time, but 200 is a great number. And I would tell people the first thing they should do with real estate is invest in real estate to learn it. If you want to play the Bitcoin game, go buy some Bitcoin first, then start learning about it, because you're not too many people out there are learning and never actually make an investment.
Okay, so hey, we got to go for a break. Look, I just want to be everybody clear on this. Grant recommends buying a large unit to start with. We do not.
There's a subtle disconnect I see in Grant Cardone's real estate investing philosophy versus his sales philosophy. Grant is almost seen as taking a more bottom-up approach to sales, using trial and error to get prospects to grow into a larger and larger pool of potential leads. He's also spoken about the idea of using upselling techniques and using smaller products to get buyers on a sales ladder in that way. You see the same philosophy of starting from the bottom and working their way up, and yet this philosophy and mindset reverses at its advice to real estate investors. Most of all, it makes new investors skip all the lessons along the way of being a landlord, managing property, dealing with the banks, getting the taxes right, and a whole host of other things that help investors move up the ladder and become a large player in the industry over time. Clearly, that's something that goes against the investing philosophy that he actually ran with in his youth, as well as other great real estate investors, including Robert Kiyosaki. Maybe that's why Robert had a subtle retort to Grant Cardone after he let him go during a commercial break, saying that he, quote, isn't looking to sell his audience anything.
Once again, listen to the Rich Dad Radio program anytime, anywhere on iTunes, Android, and YouTube. And all of our programs are archived at richdadradio.com. We archive them because we're a purely educational company. We do not raise money. We don't sell anything. And so repetition is one of the best ways you learn. So if you'd like to listen to this program again, go to richdadradio.com. And most importantly, your friends, family, and coworkers who need to learn about, especially real estate today, because it's such a hot subject.
This remains the only time so far that both Robert Kiyosaki and Grant Cardone have spoken to each other on air, and perhaps also a major cause of the thaw that exists between them. Now, it's not entirely accurate to say that Robert Kiyosaki doesn't sell anything, because the Rich Dad Company sells educational board games as well as courses and books on its website. But perhaps he knows when to market them and when not to. Let me know in the comments how you view this conversation, because I believe it was a lost opportunity for what could have been a truly enlightening dialogue between two giants of real estate investing in the United States.